Good afternoon, everybody. This is Dennis Wilborn. I want to welcome you to the Making Money Trading Stocks, Options, and ETFs webinar that we do every Friday at about 10 o'clock Pacific time. It's 8 o'clock in the morning over here in Hawaii. It's a little bit cloudy and a little bit rainy. Had some really good rains this week, going nuts. I want to remind everybody that all the materials we do present are for training purposes only. Traders should always pay per trade any new method prior to the risk of their own personal capital. Past performance is not an indication or a promise of future performance. A little bit about, I'm so glad that Brandon and my wife Michelle has joined in with the active trend trading family. Of course, we are always family anyway, but both of them bring some important skills. Brandon is just a really darn good technician. He kind of brings some of the benefits he brings to the table is he's very, very patient, like his mom. And so he helps balance me out, who tends to be a little bit less patient. And so he really helps me out. But we've been working together all the way since just about the time he graduated from college. And now he's in Boise and we're here. I want to remind everybody that discipline is the key that turns knowledge into wisdom. And that's one of the things with trading. Trading is an activity like none you've ever experienced before. A lot of time people try to translate all their past experiences and their successes in life and work and all that type of thing over into their trading, and they don't understand why they're not being more successful in their trading. It takes basically sometimes the unlearning of skill sets in order to learn a brand new some additional skill sets and allows you to become a master trader. But it is possible for everybody to do that. So let's get on with what we're going to. So our objective for today is basically a timely, actionable intel review at the end of the week. Really quickly, I want to keep this somewhere with about 10 to 15 minutes, 20 minutes at max. We'll do a real quick market overview. The question I'm sitting there going, okay, yeah, we're seeing a tradable bounce, which it has been over the last few weeks. However, is this a reaction move or is this a thrust higher? What I'm seeing so far, and we're going to get into the charts here momentarily, what I'm seeing so far, this is looking more like a reaction move rather than it may be a bottoming, where maybe the bottom may be in, but at least this initial move off the bottom appears to be reactive. In other words, it is a relief rally because the market was so oversold. So we'll see how that continues. We'll take a look at some stocks, some ETFs. Here's where we're sitting as of about 9 o'clock this morning. We were doing, I'm very pleased with the active trend trading, how it has been doing for this year, last year. Over the last 7 years that we've been working with the active trend trading and actually, have provided, services to members, we've averaged, on average, a little bit over 30% for that time period, and primarily focused on 3 different strategies, which everybody knows, which people know about. The indexes themselves, NASDAQ composite, up strongest of all of them. The Russell finally stuck its head back above the break-even point for the year. It's still down from its high from last year. S&P, the Dow, have also done a little bit of a rebound. And these numbers were taken, like I said, about 9 o'clock this morning. In actuality, the Dow is now down, which you probably are aware of. And but it just gives us a really good snapshot. The Dow is down right now about 253 points. And so those wide swings are pretty, they're very impressive. And so let's take a real quick look. First, I'm going to take a look at what we have going on with the indexes, and then we'll see if we have anything that we may want to take a look at trading later on. I've got a weekly and a daily chart going on here. This is the S&P. And here, let's cover the good news first. There we go. The good news is it appears as if we have found support at about the 2600 level. That's good news. Secondly, we have basically rebounded from that level. The TSI on the weekly chart is down towards the really oversold condition. And oftentimes, you got to pay attention on these oversold conditions. Where do they appear? And with the S&P, and going back all the way to October 2016, they appeared to be, just slightly below the zero line. Now, if we take a look just back in time, as you can see, very seldom does do we get an oversold condition that drops down below the negative 42. So what does that mean for you as a technical guys? What can we do as a technical person? Well, one, when we start getting down into these levels, it often foretells of a potential bounce, or that a bottoming formation is going to take place. And so as you can see, if we go back over time, back in 2015, we got down to negative 42. 2011, right before we went into a nice move up, we got down to that same level. So we're in the vicinity of when you would expect a big bounce. Even going back to, that's 2009. 2009, we get down in the really oversold condition, came up, did a nice positive divergence, and away we went from there. So we want to be paying attention. Have we reversed yet? The answer to that question is, well, no, not really. We've got positive indication, but momentum is still pointing down somewhat. So, okay, there's the good news is it looks like we've defined some zones where we can start making some potential plans. Now, I won't call it bad news. It's basically kind of pretty classic. We have gotten a thrust down, a reaction up. This is a reaction. When we have basically a thrust down or a thrust up, you get a thrust up, momentum carries it, up nicely, then you get a reaction back down to support, thrust up, reaction back down to support, thrust up, fails. That's your first thrust down, reaction up, thrust down, reaction up to the moving averages, or what was in the past support now turns into resistance, thrust down, and look what's happened for the week. This is for the day before this week. Thrust down, reaction up. Now, not a good reaction, which was a little bit larger than this reaction here, but where did it stop? It stopped dead in the water right at the 20-day moving average. And what are we putting in today? What appears to be a really nice bearish engulfing, which would lead us to believe that we may want to test down in this area here. Now, one of the reasons why we should welcome that is because it's that second move down into here. Let's say if we, and this goes for each one of the indexes, let's say we continue to sell off next week and we move back down in towards the support, or even to the support, or even slightly below it. And then we get, and let's say the TSI kind of turns and moves back down, but still stays away above this low back here. We still got some really nice positive divergence. Momentum's heading up here. And let's say this medium time momentum slides down here by midweek, and then we get a nice rebound from there. And so anyway, I would look for, one, we do have support at 270. I'd like to see some kind of a pullback just a little bit closer to the 2650 to 2600 level. That's kind of like my zone. If I don't get down there, that's okay. We'll basically, it may just go get approximately there and then rebound. But that's what we're looking at because that's the way we shape up a nice bottom. What's another way to look at this? Well, it looks like we could be putting a 1, a 2, left shoulder, head. Let's say we come back down here and put it not quite down all the way to the bottom of the head and then move up here. Right shoulder. So an inverted head and shoulder, which turns out to be a fairly excellent, strong reversal pattern on its own. Eric asked a question, how can we tell if this is the first bounce for a D bottom? For a double bottom? You'll know that it's the first bounce after you see the second bounce. I know that, and I'm not being silly in that answer, but a lot of times that's when you know you have it. And it depends on if you're talking about a technical, a traditional technical bounce, which basically we would come down to approximately the 26th level, or an IBD bounce, which is, it basically has to overshoot the bottom. So that's what we have going on there. I wanted to share that with you. Okay, that's what I'm looking at right now. Looks like this is a reaction move up, stronger reaction than this move up here, but we're getting these thrust and, these thrust and moves higher. And let's take a look at the NDX. No, let's not do it that way. Okay, what's the index telling us? Well, one, NASDAQ actually broke this longer term trend line more significantly. And what's very interesting, we're getting the same type of thing. Thrust down, reaction up. Thrust down, reaction up, right back to the 20-day moving average. And so the NASDAQ is also acting like, guess what? The downtrend is continuing. Now, if we come down here again and put in a higher low, rebound, take out the higher high. But if we come back down here and we fail to get back to the 6,600 level, that's telling us that that may be one of the first indications that we're getting ready for a more significant bounce to the top side, to the upside. Russell. Well, shoot, Dennis. No, don't shoot, Dennis, please. So Russell, similar type situation. Russell is actually at this particular point in time acting a little bit stronger than the other two indexes, because look what's happened with this. We have a nice move up. Again, it was a stronger thrust down, minor reaction up, thrust back down. Now we're getting a reaction back up into the resistance. And if you're sitting there going, well, we see this kind of pattern all the time. And if you're asking yourself, why am I not being more patient and just waiting for these? Well, we're going to be working on that with the active trend trading, where we're going to be highlighting these areas more. So we're going, hey, we want to start planning our trades around what happens after the reaction. What happens after the reaction? So just FYI, that's coming downstream. So it's, reaction back up. It's holding up fairly well. And the big thing that happened with Russell this time is it has held and broken back above the 8-day moving average, which is oftentimes a very positive sign. What about, I can't remember if NASDAQ did that. Yeah, NASDAQ broke above the 8, but is now breaking back down below the 8. That's what I'm saying. The Russell appears to be a little bit stronger right now. So let's go back over here. So with the reaction back up, here's where we're sitting for the year so far. I'll be updating and posting information on the website over the weekend. Here is what we're doing. The go, no go table has been very popular. We were looking like we were going to get a trade in oil this week. That did not come to fruition. However, we did do some trading in with the XOP, which is the oil and gas exploration. And we are basically also did a new strategy 3 trade on that came off the premium training webinar on Wednesday night. This is updated on a weekly basis and provided for our premium members. Here's what we're doing. I'm waiting for something to happen with Magnificent 7. And again, right now, it looks like if the market closes where it's at, we are looking very much like this past little move up over the last week, just this week, has been a reaction rally. And then we'll wait for a pullback now back down into the past lows or maybe a little bit lower. And then what happens from there? It's that second move down that defines, are we going to get slammed and really head a lot lower, or is the market going to give us a positive reaction and roll up a little bit earlier and then give us that strong end of year rally? That's what we're waiting for. So Tesla, we lost a little bit on our Tesla position over the week this week. However, we replaced that. We did a nice strategy 3 trade on BABA. Closed out this morning, gained $386. Our cash flow on strategy 3 for October was a little bit over $5,900. And so I want to remind you, hey, I am presenting tomorrow, and I'm going to be giving away about $700 in various kinds of gifts. And so I'm presenting on the 5 pillars of all successful trend trading systems. This is a refurbished presentation. This is a brand new presentation, getting into some of the nuts and bolts on how to make sure, if you're not trading like the active trend trading system, how to make sure whatever system you are trading meets the system. This is a free open house to the Bay Area Moneymakers meeting. Go to this website, at facebook.com /active trend trading, and interact with us there. And if you do, please do that. Here's what that looks like. And here's the agenda. And if you basically just leave a comment, this thing will engage with you and actually get you your invite to the presentation. And so then you can go to the presentation. If you want a recording of the presentation, you're going to need to be, you're going to have to register for the webinar. You don't have to attend the webinar. You do have to attend the webinar if you want to win one of the prizes. However, you can basically see the video recording even if you don't go to the webinar. But I'm really pleased with it. And it reminds me, I encourage everybody, please, if you're watching this, this is a recording or watching it live, please go to this website, start interacting with us here. We start, my Brandon is ready to convert a lot of our stuff over to Messenger, and it'll provide a lot quicker response time for any kind of question you may have about a trade, about a stock you want to be trading, that kind of stuff. But we're actually going to get that where we're going to be doing private alerts this way for premium members. And so, and the other thing is, please engage here. Leave a lot of comments, because one thing that Facebook does is they measure your ability to become a sustainable business owner with them by the engagement. So if you will, like I said, please just engage with us there. And on this, and also our YouTube channel, please give us a few likes, and leave comments. That's one of the things that's very, very important. So we shall see. Anyway, take a look at that. That's how you reach it. And then also our weekly training, our premium weekly training every Wednesday. This is for premium members. We're getting into some really meaty stuff over going into the end of the year. And so, Mark, that's a great question. No, you do not have to go to Facebook. You should have already received I know you're on our regular mailing list, so you should have already received an invitation to tomorrow's meeting. And but I do encourage you to go to the active trend trading section there, page on Facebook. We're going to start having a lot more information there on that page. in the process of reproducing all of our videos, hopefully get that simplified by the end of the year. And of course, our maps conversion, we're converting from maps over from the EWA. We're really pleased with that, how that's going. One of the things I'll just highlight right here really quickly is these patterns right here. Every stock pattern is basically combined, you know, is a combination of all these things here. And they incorporate just very, very simple things. A thrust, a reaction, a thrust, a reaction. And if we can learn how to trade these, you don't have to worry about needing the name of every, you know, Tom, Dick, and Harry chart pattern that's out there, because learning to identify these, which I'm going to help every premium member start doing and start trading this, will help you whether you're trading options, whether you're trading futures, whether you're trading stocks, whether you're trading ETFs. This is going to be a very big thing, I think, for active trend traders, and help you to be more successful and also simplify what we're doing. So good stuff there. I'll just leave that as a little tease out there. That's some of the training we're going to be doing. And if you have not watched the maps video, well, there's going to be a new maps video coming out for non-early warning alert members. That's going to be talking about, you know, becoming a charter member with that. Seasonality, we're still looking at it. We're just finished the October timeframe. And it looks like we're going to be hopefully shaping up for a really nice move going into the end of the year. And this little pullback, if we get a pullback next week down towards the lows from last week, or lows from this week, that is probably going to be the springboard we're looking for to run higher into the end of the year. Gold. Gold and a dollar Intermax. We're going to be doing a presentation on gold and dollars. So anyway, that's what I've got for this week. Folks, we'll be going over to the final hour at the top of the hour. I have time to look at one or two stocks if you want me to, but you have to tell me which one you want me to look at. So until next Friday, aloha. Have a great weekend. I love this picture of me and my granddaughter. She loves the ocean. So anybody, any stocks you want to take a look at really quick? And if not, okay, great. How about if I take a look at LABU rather than, I'll take a look at that one, Eric, and that will basically do it for today. There we go. Yeah. I guess the one question I have before I move on to that is, does everybody see this thrust, reaction, thrust, reaction? Do you see that pattern? Because it's developing the ability to see that pattern, which will allow you to develop the ability to be trading some in an all new way very, very shortly. So I've got, okay, cool. Thanks, Mark. Let's see really quickly, SPSIBI. This is the biotech industry group. Looking kind of interesting here. What do we got going on? From what I'm seeing right here, let me get rid of these. Let me get rid of these. Oh, come on. Clear drawing set. Yes. You can tell I'm putting through a lot. So let's click. So what do we have going on here? Thrust, reaction, thrust, reaction, shooting star. In reality, what should we be doing on a situation like right now if we're watching LABU and this is telling us that we're in a downtrend. We just rolled up. Yep, you got it. Sell, 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 or buy LABD. Is our LA. Yeah, let me find it. There we go. Or buy this. Do we want to be a buyer right now? Not really all that bad of a spot. Where's it likely to go? Well, it's likely to go back up there to the 42. Is it worth it? How much of a risk do we have? I certainly wouldn't want to, yeah, you're talking about like about 8, 9%. Wouldn't really want to roll with it down to that level there. But what I might do if because I don't have a ticker yet on my TSI on the daily, weekly looks like it wants to fall a bit, but since I don't, I may want to see if it retests in here. But that's a really nice hammer. But what about the weekly? Yeah, the weekly is kind of hard to tell on this. This is why you need to be looking at the IBB. Again, IBB. Now, IBB is, or the S&P biotech range. Similar type situation. It is sold off. It's moved back up here. Again, if we get a retest, then that's what we'd be looking for. If it retests back up into these areas here, that might give us a reason to sell on the other side, or test up in the, anytime up into the middle of the big body. So, okay, because that weekly, yeah, I'm not saying it looks like it wants to absolutely turn around. Still got some momentum going down to the downside. It's reaching resistance. So, okay, my friends, that's it. I'm going to wrap it up for today. Thanks for asking the question on that. Again, please visit us at our YouTube channel and also the Facebook page for the active trend trading. And if you want to attend tomorrow's Bay Area Moneymaker meeting, just sign up and register. And if you have any issues whatsoever, shoot me an email and we'll get you registered and signed up. So until next week, aloha. God bless everybody. Have a great weekend.